between 2020 and 2030 alone, that the amount of lithium being extracted needs to increase by 4.5, 5 times at least. And that is an enormous challenge for any industry. There's not too much know-how in this industry of how to develop a project, how to execute it correctly, the problems you have. And I think execution will probably be the biggest challenge in projects to be developed over the coming years. Batteries today are a very significant portion of the global demand for lithium. In 10 or 15 years from now, it will be, from a practical point of view, almost everything.
Welcome to viewers catching up on this session for The Assay, providing some insights into mining and the energy transition related themes. I'm very pleased to be speaking with a highly respected individual within the lithium industry, Daniel Jimenez, who is founder of Ely Markets. And Daniel has a long career within the lithium industry, previously holding positions with large producers, and now sits on the board of some innovative junior miners as well. So I'm very pleased to be catching up with you today, Daniel. Thanks for speaking with us.
Thank you, Adam. Thank you for having me here.
Yeah, great. So wanted to start off by getting some understanding of your take on the supply and demand dynamics. We've got COP26 going on in the background from when we're recording this, and I think that sets the scene nicely to talk about whether you think the data analysts, the OEMs, and also the governmental analysts as well seem to be misaligned over their EV sales penetration rates. I note that there was some action actually from the COP meeting last week where a number of the European OEMs refused to sign an agreement on a delivery date for ending vehicle emissions or ICE vehicles around 2040. Do you think this stalling might have come from a realization of the supply challenges around lithium?
I don't know if that is the real reason behind. At the end of the day, it's a significant shift from what OEMs have been doing for the last 100 years. And I think a short window to do all that change is probably also very, very aggressive. And probably also, I mean, the world is not going to be binary. I mean, it's hard to believe that internal combustion engines will stop existing beyond 2035 or whatever. But it will be a majority, probably at that point, of electric vehicles, battery powered, and that's a fact. So I mean, I wouldn't take this as a signal of concern. It's simply the speed of transformation which is demanded is tremendously high.
Yeah, certainly. And do you think that, that there is misconception though around availability of supply, particularly around battery grade lithium hydroxide or lithium carbonate, particularly around people that maybe are not on the mining side but are further down the value chain, or even the government?
No, I think that is a legitimate concern. And essentially, and I think of all the battery materials, lithium is probably the most concerning in what respect, in the sense that batteries today are a very significant portion of the global demand for lithium. In 10 or 15 years from now, it will be, from a practical point of view, almost everything. This means that the lithium industry needs to grow by several times its supply. And between 2020 and 2030 alone, that the amount of lithium being extracted needs to increase by 4.5, 5 times at least. And that is an enormous challenge for any industry. I think it's different for nickel, for manganese, where today batteries represent a smaller proportion of copper of the global demand. So yes, it will grow a lot, but it will proportionally be less. So I think there's a legitimate concern about long-term availability of lithium. We also have now 2-3 years where there was very little investment done in the lithium industry. To me, it's not a concern about battery grade. At the end, reaching battery grades is a chemical process which you can, with capital, and you can easily then build that chemical refining, so to say. To me, the real concern is lithium extraction, and that is mining. And mining is something which takes years to develop. I mean, it's unthinkable that any mine can be in operation in less than 5-6 years. I mean, there are very few cases where you have found that. In the lithium industry in particular, I mean, we have today projects coming online next year, which have been on the table for 15 years now. Now, of course, now there's more capital, this will speed up things, but to think that lithium can be brought out of the earth just like that is to be very optimistic.
Yeah, certainly. Good point. We'll come on to that in the mining aspect in a minute. I just wanted to ask, while we're on the supply and demand side, I won't ask for a price prediction, but are you quite bullish on the lithium price near term going forward? Do you think there's scope for it to go higher given the demand and the supply risks described?
In our assessment of supply demand balance, I mean, we generate a forecast assuming certain EV penetration rates, which in general in our forecast is probably more on the lower end of what forecasts of specialized companies are. And we're talking about an EV penetration rate of about 36% by 2030. There's some forecasters who are talking about 50%. But under that scenario of a 36% EV penetration rate, it appears that by 2030, it appears that it will be very difficult, or it will be tough for supply to catch up with that demand, especially over the next 4 or 5 years, where essentially the supply which will be available during this next 4 or 5 years is more or less, we know what it's going to be. There are not many possibilities that it is much more. And beyond that, it will really depend on how much money goes into this industry today. So in general, we'll see this decade as a very tight decade between supply and demand, with the higher probability that demand is higher than we consider in our supply-demand balance. And on the other hand, that supply, I mean, to bring up projects to greenfield projects, especially with all the execution risks of that project, many of them with technological risks, with ramp-ups which usually are slower than forecasted. In our assessment, in our forecast, we also think that there's a high probability that supply is more than what we're forecasting. So bottom line, there is a higher probability of lithium shortages than oversupply over the decade in average. So this leads us to believe that there will be, in average, abnormally high prices above incentive price levels. And yeah, this leads us to a bullish price forecast for the lithium industry in general.
Excellent, very good. Okay, so coming to the miners then, I wanted to talk about the junior mining market, which is typically very much constrained of capital. Do you think there's anything that the mining companies need to do to continue to attract funds so that we can help meet this supply challenge, and in particular new capital coming into the sector, sort of ESG conscious capital that should be looking or thinking about greening the world? Surely they would want to move into a lithium project, for instance.
Yeah, I think we have seen a very important change over the last 8 months. So
right.
In terms of capital, interest of capital flowing into this industry, and this is of course consequence of this new price scenarios, and so I think capital is available today. We have seen the inflation of project acquisition costs in Argentina just over the last 3-4 months. And there are more and more bigger players coming into the scene which can fund this project developments on their own. So I really don't think that capital will be a constraint, which it has been over the last 3 years prior to that. No? So we will be able to have some catch up on that. The real constraint here is to execute this project developments correctly. This is a young industry where there is relatively little know-how. I mean, and to put it in simple terms, mineral mining, the know-how is in Australia, but the mineral refining, that know-how is all in China. And then if we go to brine production through conventional process, that know-how is essentially in Chile and Argentina, and mostly in Chile. And that's it. So there's not too much know-how in this industry of how to develop a project, how to execute it correctly, the problems you have. And I think execution will probably be the biggest challenge in projects to be developed over the coming years. To add to that, you have to add that permitting is becoming increasingly more difficult all over the world. And then when we think of projects in Europe, in North America, where you start at very early stages already to have opposition to those projects. This creates all an environment where to develop supply quickly becomes increasingly difficult. So, yeah, it's a very legitimate question at the beginning of your first question. Is there concern about long-term availability? There should be a certain level of concern or consciousness that the industry needs to work very quickly in order to meet demand. Yeah.
Certainly. Just coming to one of your points that you raised there on permitting and then talking about the brining expertise, particularly in Argentina and Chile, I wanted to just ask if you could share an update or your view on the situation in South America, particularly with the Chilean government tendering a number of quotas of tonnage to the international and national companies. How has that gone, and is this going to put Chile back in the ascendary compared to Argentina, or how do you see the landscape of competitiveness there?
Yeah, I would say first of all, Argentina has a very good starting point today. In Argentina, there are several projects well developed from an understanding of the hydrogeology of those projects and also the process. So and in more advanced stages of development. So Argentina over the next 5 years will probably become a significantly bigger lithium producer than it is today. And this is thanks to probably work which has started already 10 years ago, in terms of exploration of project development. In the case of Chile, until this tender was issued, the possibilities of Chile were very, very limited to Atacama probably, and not much more. What Chile is now doing is issuing a tender for permits to extract lithium. Now, what this will allow is for whoever buys this tender or gets awarded this permits, they will be able to start serious exploration programs. Chile, unfortunately, has not been well explored because of this restriction on lithium. So I would think that any good news in this regard will not mean that Chile is not going to produce more lithium beyond what is today on the being producing in the next 8 to 10 years. I mean, it is unlikely that some project can be developed if the discovery is done today, or if it can be developed that quickly. So it will not have an effect before 2028, 2030.
Understood. Okay, great. Let's focus then on how the major miners are performing, the major producers within the sector. Do you see any change in strategy from this point on? Do you see more M&A coming as they acquire other assets?
Yeah. there are different things to talk about. I mean, first of all, Albemarle, who has made finally announcements which will enable it to use all of its resources at a maximum extent, and we're talking about Talison, their share of Talison, their share of Wodgina, and with their refining capacities, which they're setting up in China, with Chemetall coming online. This will mean that basically Albemarle will be able to produce more lithium chemicals, and probably need more lithium resources. Yeah? So I would guess that Albemarle, if it builds this announced 2 plants of 50,000 tons each in China, it will need additional resources to produce spodumene concentrate. So I wouldn't surprise me that Albemarle should be active in that space. SQM, on the other hand, will continue with its expansions in Atacama, with Australia, with Mount Holland and its joint venture with West Farmers, that is also under development. I don't know if there will be other moves, but probably if any company which wants to maintain a certain significant share in its business will need to look for new resources. Then the next in the line would probably be TNT, where I don't know if TNT with their 50% of Talison, if at the moment they have the possibilities financially to look for more assets, which Talison is going to go to full capacity and probably expand later on. But I would presume that TNT would like to do something. Probably the financial position for the moment is not as strong. And then we have Ganfeng, and Ganfeng is probably, to me, or has already demonstrated what they want and need to do. Ganfeng has stated ambitions to produce 600,000 tons of lithium chemicals. But today, with the assets they own, their own production really, the proprietary production is probably not more than 40,000 tons of LCE.
Right.
That's why it has invested in several projects, brines, minerals, in all geographies, and is probably very much in need to have these projects developed and that they are successfully executed. So Ganfeng has already made significant moves and will need to for most of these projects to be developed and become a source of feedstock for their lithium chemical ambitions. Ganfeng is the route they're seeking is very clear. But for their target of 600,000 tons of lithium chemicals, it's probably still very far away in terms of lithium feedstock, what they need.
Excellent. I wanted to ask about your views on DLE, and not specifically on any companies, but just generally on this coming through as a new technology. Obviously, there's a lot of appeal with zero carbon in the lithium extraction process. Do you see it as a near-term reality, or perhaps a bit further off yet?
DLEs have been around for decades now. You can argue that Livent is using DLE technology in Hombre Muerto, Argentina, a long time ago. China has also used direct lithium extraction technologies already also for quite a while. Apparently, China has had some breakthroughs, technological breakthroughs over the last years, which could enable it to grow. But most of the DLE discussion has to do with the possibilities to use DLE in the lithium triangle, so in Chile, Argentina, and Bolivia, and in some lower lithium-bearing brines, geothermal or oil tailings in North America and Europe. On the DLE used in South America, we have seen for many years several companies trying to develop their technology there. They have failed so far, and the reasons are many, but but in general, I'm very skeptical about it, in the sense that I've seen too many assuring that they're capable of and then failing. But there's so much work being done today that eventually one will work. Which one that is going to be, I don't know. The promise they bring on the table is very interesting, because from a CO2 footprint, I think they're definitely not better than a conventional solar evaporation process, but they could enable an increase of yield, and that of course has a lot of value. I mean, if you think about, say, Atacama, instead of producing 250,000 tons to be able to produce 350,000 tons, there's a lot of value if such a technology would exist. No? Even at a higher capex and a higher opportunity, they will certainly have. So I think this is a matter of waiting and until somebody really is capable of proving that these technologies will work on a long-term basis. It's different for them to operate in a lab or in a pilot plant than to work in the Andes at high altitude with big temperature variations between day and night, with dust. So it's not that simple as it is painted. These technologies in general, some of the general failures you find in them is that they require a lot of fresh water, which is not available in that part of the world. They're very energy intensive, which which has cost implications. The capex also could be eventually very, very high, depending on the flow you need to put through that plant. So again, I'm not saying it's not going to work, but we still have to see who is going to be the first one really working. I would only draw your attention to two things. First, that SQM, Albemarle are not using it, and they would have very big incentives to use it. Probably they're studying it intensively. And then also Ganfeng, which could have probably access to some of these Chinese technologies in domestically there, and to transfer them to their operations in Argentina, or their projects in Argentina. They're also not using them. And it might be that they will use it, I don't know, but for the time being, we have not seen that. That's why I think we have to be very cautious on direct lithium extracting technologies. Now, on the front of the low lithium bearing brines, which you find in North America and Europe, well, a little bit the same. I mean, there's good efforts, work being done by Standard Lithium, E3 Metals, Vulcan Energy is also announcing, but I think this needs to be seen. I think this technology is not as simple as it's being stated publicly, so to say.
Yeah, absolutely, very clear. Great. While we're on that trail of thought, then around, let's think about other competing technologies that could end up, impacting the demand for lithium. I'm thinking about lithium-ion versus sodium-ion batteries, for instance, and some of the advancements made there. How do you see that landscape developing for competing technologies?
That's a very good question, given this long-term high price scenario for lithium. I think this is probably the biggest threat for lithium. High prices for a longer period of time will create, or are creating already, a lot of incentives to reduce the use of lithium, basically to use for technological alternatives. And I think here there are a couple of things which could affect the demand of lithium-ion battery. As you mentioned, sodium-ion batteries could fill a space in, for example, stationary energy storage. Then high prices of lithium-ion batteries will probably also trigger a revival of hydrogen fuel cells. That I could easily see as a way out for OEMs to have an option to EVs. I think it will definitely accelerate the recycling of lithium-ion batteries.
Yeah.
We, under lower price scenario of lithium chemicals in general, or battery chemicals in general, the incentives for recycling are lower, and probably the incentives to use that spent batteries in EVs and give them a second life in stationary are very big. But now with higher prices, probably the second life of batteries will reduce its proportion, and recycling will accelerate. So then, yeah, recycling will be a new source, a bigger source of lithium than what we were predicting 1 year ago with a lower long-term price environment. And finally, the other development which could be triggered by this is to reduce the size of the batteries in electric vehicles. That means reducing range, but maybe compensate that through fast charging. And that is something which could develop a higher proportion of smaller sized batteries in vehicles, but fast charging, so that the range anxiety gets reduced somehow. So I think these are all developments which will come with this potential higher long-term prices of lithium, and which will affect the demand of lithium as well. Huh?
Yeah, very much so. Okay, a last point I wanted to touch on was the outlook on offtake activity. Obviously, there's been a lot of activity of OEMs, battery cell manufacturers, striking offtake deals. I'm just thinking about this idea that the value chain is coming closer together, and that as OEMs and cell manufacturers want to secure supply, do you see them doing more than just offtake deals, but actually becoming LPs, owning companies, buying into mining companies, or is it still too risky maybe, and that's why the offtake agreement is the preferred model?
Yeah, I would say in general we have seen very few OEMs, especially, taking some type of equity position upstream up to mining. We only have seen them really being active in moving upstream into batteries, but not even into cathode production. And they're leaving today most of the lithium supply. They're expecting it to be secured by their cell supplier. Now, this, of course, is a risk, and I think many OEMs are starting to realize that. We have seen now a number of offtake agreements signed by OEMs, some of them with this more greener dressed projects like Vulcan or Vulcan Energy or Control Thermal Resources. But when we look at equity investments, the only ones which have really done something in terms of equity investment is Toyota through Toyota Tsusho, BYD and Great Wall, which have investments in lithium, minority shares in some of the lithium miners in China and in Australia. And I think from talk about it, only General Motors announced some strategic investment in Control Thermal Resources. But that's it. And it's in volume-wise, it's only a very small proportion of the total lithium which these OEMs are going to demand. Yeah. So and we also know that some of them have looked into this, but it's hard for them to make that strategic decision of integrating upstream. So I don't know how this is really going to move. If I would be a big OEM, I would certainly try to secure some of my lithium through either a direct equity stake in some lithium miner, or eventually trying to hedge my lithium costs by investing in whatever lithium miner. In that way, I can at least, I can buy lithium expensive, but I get compensated through my investment elsewhere now. So yes, I think OEMs are today in a very vulnerable position, and they should take action to reduce that vulnerability.
Yep, certainly. Excellent. And just finally, for viewers who would be interested in Ely Markets, could you just give a summary of what you do now at the moment?
Yeah, we at Dilemma Markets, we come from more than 20 years of lithium experience. We have our flagship product is a quarterly market review, which we do on a one-on-one basis with clients. It's a presentation actually, and yeah, and from that we do quite a lot of other things with which have to do with specific advice on strategy, on procurement, on offtake agreements, and also on the front of asset valuations. We are supporting companies on their M&A activities. So we have also a arm more dedicated to the more project development side, process side, and basically drawing on all our experience and contacts with former colleagues of us who have worked now for many years and have practical experience in developing lithium projects. So we are basically active in several of the fields of the value chain in lithium.
Fantastic. Okay, well, that's been really insightful. Daniel, thanks very much for speaking with us, ATV. Really good to speak with you and get some insights on the industry there.
Thank you very much, Adam, and thank you for having me. And yeah, and good luck to everybody in this market, which will be a very dynamic market over the next decade.
Yep, exciting times ahead. Thank you.